In each of the following cases, calculate the accounting break-even and the cash break-even points. Ignore any tax effects in calculating the cash break-even. For case 1, the contribution margin per unit is $745. This is the $3,020 selling price minus our $2,275 per unit variable cost. For case 2, our contribution margin is $11 per unit, which is the $38 per unit selling price minus the $27 in variable cost. For case 3, our contribution margin will be $7 per unit. Let's go ahead and consider the cash break-even and accounting break-even for case 1. We can calculate our cash break-even by setting net income to 0 and ignoring depreciation expense. We're told our fixed costs are $14 million. Therefore, to achieve a net income of 0, we need to earn a contribution margin of $14 million. Recall that we calculated our contribution margin per unit, which was $745. Therefore, the number of units we need to sell to break even is 18,792. This is our total contribution margin of $14 million divided by our $745 per unit contribution margin. To calculate our accounting break-even, again, we set net income equal to 0, but this time we include depreciation in our calculation. Our depreciation expense was $6,500,000. Our fixed cost was $14 million. Therefore, in order to achieve break-even, we need a total contribution margin of $20,500,000. We take this $20,500,000 and divide it by our $745 per unit contribution margin, and we find our accounting break-even occurs at 27,517 units. Let's go ahead and consider case 2. Again, we can calculate our cash break-even by setting net income equal to 0 and ignoring our depreciation expense. Our fixed cost in case 2 are $73,000. Therefore, in order to hit break-even, we need a contribution margin of $73,000. We take our $73,000 contribution margin and divide it by our $11 contribution margin per unit to arrive at our break-even point of 6,636 units. For accounting break-even, again, we set net income equal to 0, but this time we include depreciation expense in our calculation. We're told depreciation expense is $150,000. Our fixed costs were $73,000. Therefore, to have 0 net income, we need to earn a total contribution margin of $223,000. This is our fixed cost plus our depreciation expense. Our variable cost, or our variable contribution margin rather, per unit was $11. So to calculate our break-even point in units, we take our total contribution margin required of $223,000 and divide it by our contribution margin of $11 per unit, and we find accounting break-even occurs at 20,273 units. Let's consider case 3. Again, set net income equal to 0. We will ignore depreciation expense while calculating our cash break-even. Our fixed costs are $1,200, so we need a total contribution margin of $1,200. We divide our total contribution margin by our $7 per unit contribution margin to arrive at a cash break-even of 171 units. For accounting break-even, again, we set net income equal to 0, but this time we include our depreciation expense of $840, our fixed cost of $1,200, which means we need to earn a contribution margin in total of $2,040. We'll divide this by our contribution margin per unit, which was $7, and we arrive at an accounting break-even point of 291 units.